Hi guys, my name is Rudo and I am a full-time, you get to quit your day job trader and investor in crypto. And today we're going to talk about yesterday's buy zone. So as I explained to you guys on the larger time frame that everything was still bullish for me and still remains bullish as that. So from a 4-hour swing potential, this was the shakeout / cautious warning that what if the shakeout turns out being a trend change stream that I basically spoke to you guys about. So here we are today. So you can clearly see that Bitcoin has respected the support or the demand that I showed out to you guys and is pushing up nicely. So nicely in the bigger scheme of things, it's 4% for the day on spot. So that is a really good amount of gain that we've got. So now the big question is what's going to happen for the rest of the day, rest of the week, and for the leverage trader in me, because if I take a position with so much risk, 3% risk, I can only buy this on spot. So the leverage trader in me now needs to look for an entry so that I can go and borrow money, maximize my gains, and inflate the amount of percentage gains into my portfolio. Meaning, so if I can buy 10 Bitcoin in this area versus 1 Bitcoin, the fact that it went up 4% gets exaggerated by 10 times. So it goes up 40%, and that's how I can make 40% to my account. And that's the life of a leverage trader. So it means everything I say always goes about where do I draw the line if I'm wrong? Because if you plan to fail, or you plan for the failure, rather, let's say it better, plan for the failure, you end up not guessing and worrying when things do go wrong. You know what to do. Simple as that. Okay, so let's see who we got in the comments. Morning, Renee, Tian, Vitali, hello, buddy, and Zenodiac is also back, finally able to join alive. And Mr. Mart, as always, there on Twitter. Thanks for taking the time joining live with me. Everybody's jumping on. I see we slowly but surely picking up on the live eyes watching the stream. So as the comments are coming through, morning guys, and morning guys, more guys coming our way. Okay, so let's unpack this 4-hour Bitcoin trend, and then let's see how we're going to be making more money out of this for the remainder of today. Important thing I need to go and have a look at is the Dixie. Okay, Dixie, I would love to see the breakdown of the structure now and start seeing it go lower still. Now, if we look at the Dixie from a weekly point, remember now we're talking Bitcoin 4 hours, so I want a swing position, and it means that I want to see the Dixie on larger time frames give me the necessary info to say that it's going to be selling off. I need that little bit of common sense to return to the market, meaning Bitcoin needs to pump when the Dixie dumps. That's when the real big moves happen. Okay, so the weekly time frame is a little big and a little vague at the moment. So let's say maybe we need to go consider the daily or even lower the 4-hour time frame just to kind of see where we're at. So I'm going to leave all the scratch marks on the screen, guys. Please bear with me if that irritates you. It's just a nice visual reminder of how and what I see. Okay, so now that we're in this area, you can clearly see that the Dixie is still fighting back. The need for people to secure their gains is still there. That's basically what this is telling me, because we've got hidden bullish divergence. Okay, so the Dixie, it's literally, that's all that it actually means. I probably can't, I'm probably over talking the point. It means that there's still people worrying that things are going to go lower still. And that worry is translating into the Dixie as money flowing out of risk on assets like gold, like silver, and because these things are pushing all-time high, and people aren't greedy enough, nearly enough. Meaning, if you look at this from an emotional point of view, okay, people aren't in this area in the sense of euphoria, because that's when risk just goes out of the window. Okay, just get me in, I want to make money. Okay, Thrall, I'm making money like crazy. So if we're in this area of disbelief, hope, recovery, that's typically when there's still common sense in the market. People are cautiously weighing up their pros and cons and acting accordingly. Okay, so that's what the Dixie is basically telling me. There's still a little bit of common sense left in the market, so it's not ready to go parabolic just yet. Okay, so to take that then to the Dixie, to take that then to Bitcoin, that's something I'm going to need to help me formulate my 4-hour strategy. In addition to this, I think it's worthwhile that you need to plan for today's volatility. There should be some US volatility later on today as the FOMC funds rate comes out. Okay, now, typically during bull markets, these kind of information or these kind of figures become useless information because everybody just keeps on throwing fuel to the fire, just keeps on pumping, and in the end of the day, and that's it. That's all that's going to happen. So at some stage, people are just going to say, what's the story? Why are you doing this? Remember, that's exactly that. Okay. Interesting comment here from Jockey. Jockey saying, give me a 777 if you're a scammer. I think let's give me a 111 if you've been with the community long enough and you've made profit with the calls and everything. Let's try and see if we can get a 111, Jockey. So hopefully you'll be replying to that as well. Okay, so while that happens, as there's always a little bit of a delay between the comments and what I say, there's the ones coming through. Let's quickly then take this 4-hour, and I want to analyze those 4-hour candles. Okay. So the best way to do that would actually be, I'm going to just leave this there. We're going to refer to the buddy a little bit later, the buddy indicator, is to just go to this screen over here. And because it's only a few 4-hour candles, to dive into a 15-minute or a 1 hour would almost not make sense in that sense. Okay, so the game plan is I want to dissect those candles and I want to see how high can they go. Okay. So we're looking at this. It means that I'm going to have to look at like a 5-minute or something like that. Okay. Now, typically the best tool that you would use to analyze your 5-minute time frame for any coin, whichever you want to be looking at. Remember, I teach as I do so that you can go and replicate because there's too many coins. I can't be in all of them. Okay. Literally, I can't be in all of them. All right. Let's see. Dreamcatcher, he is balls deep in the market. Okay. Yes. That's a good way to look at this. Okay, so first thing that I would always do is I say, okay, right, there was strong bearish momentum, okay, which means that it got broken, and from that point onwards, there was a base. So somewhere in there, I need to look for where the demand zone was that created that insane move, okay? And typically how you would pick that up is you will have that, and you'll have that, and you'll have that, and you'll have that hidden bullish divergence, a sign that there's more to come. Okay, so this will then be for the Elliott wave, guys, your typical wave 1, 2, 3, 4, and then this next push will then take you to your wave 5. Okay, 3, 4, 5. Okay, this means that all of this gains on a larger time frame will also still be substituted to the same kind of retrace, because this then in essence needs to become and I'm just going to use the Elliott wave as a really easy example of 1, 2, 3, 4, 5, however high it wants to go. Okay, so immediately now I know that on the 4-hour time frame that I'm looking at, or the impulse that I'm looking at, that's still going to come a really nice shakeout, and it's at that stage that I'm going to try and want to look for a good entry. Now I have that little bit of a what the structure means behind me. I can then look at this in further detail and say, okay, let's take away the RSI now real quick, and let's have a look at how this price is performing. Because when we know, what we know is when price is moving at a low angle, meaning low bottoms, it could be considered a sign of strength, large limit orders holding price, preventing it from falling through. But there's not a lot of momentum there. So leverage trader in me needs momentum because I want to be borrowing money. I want to make the money and I want to give it back. The longer I keep the money, the more I, what's the word I'm looking to, expose myself to market volatility, news events, all sorts of BS that can literally just come and take my stop and then run. Okay, so that's all that I want to try and do. Okay. Jockey, my friend, we'll talk to that after. So let's then take the next part, and then now that we know that, then what do I want to see? I want to see steep angles. Okay, so that's what I'm trying to look for, and the best way to try and define whether we're strong, weak, and is to actually look at this from pivotal point of view. How does the market respond? So the RSI gives you a lot of clues around this area. So you're trying to look for when price is crossing there. Let's delete the old ones. Crossing there. I'm just going to move them. Crossing there and crossing there, because that is typically when price is moving from a bullish momentum to a bearish momentum. So how the RSI calculates this is very simple. It looks at the amount of candles passed, looks at the amount of gains versus the amount of retraces, and does a little calculation and size and decides whether it's above 50%, which means more gains to the bullish side, or below 50 cents, more gains to the bearish side. So it's a simple way of you to just read the room. That's what the RSI does. Should probably just be called read the room. Okay, so because if you know what everybody's plan was, it's easy for you to outtrade them. Okay, so the RSI's objective is for us to try and read the room. Okay, so if that is the case, it's very simple for you. You can literally just hit on the vertical line, tag all these levels real quick. Okay, so let's tag all these levels. Right, now it crosses over under, so I can look at that one there as well. It crosses over under, I can look at that one there as well. And it's probably potentially about to do the same. Now that I have these levels turned, when the market turns bullish, bearish, I want to look for where the big players in the market is. Okay, so I want to look for demand and supply zones, because when you have these demand and supply zones, it's easy for you then to see when are they going to defend price. And that's when I want to buy, when they're defending price. And when are they rejecting? That's when I want to try and take profit. Okay, so typically what you will see is when you zoom into those areas, okay, is that there was a demand zone there. Now, remember, guys, TA, as I always say, works 100% beautifully when you're looking at the past. It's much harder when you're trying to predict what's going to happen further. Okay, but there would be a strong demand zone. Okay. If I then use this, let's just mark this as a demand zone box, okay? And I can do the exact same there and say to myself, there was strong demand there. And we can say that there was strong demand there. So now it's still a lot of wishy-washy stuff on the charts, because in the end of the day, what do we have? We don't have a cross there. So I don't really have a demand zone that I could use. So I'm going to have to look at this area here as my demand, okay? So this then tells me the following, okay? We are quite high from demand. We've fallen through, so we've got supply that's acting at the moment, but we're not at any stage close to an area where a whale would be buying. And now this is the next thing. This is where your trend lines come into play. Now, I'm using them in a different way. Now, typically, this is what you would do. You draw a line, trends down, simple. It's the same as a moving average for that reason. But what I'm trying to do now is I'm trying to guess into the future, predict into the future when the next demand zone is going to get, so that I can get that thing hit. Okay, so the easiest way to do this then is to use your trend line and say to yourself, okay, when was the most amount of loss or gain made? Okay, there was the most amount of gains made. Okay, so it means that public wasn't participating there. The most amount of loss was happening there. The public wasn't participating there. The most amount of gains were made. The public wasn't participating there. And there it becomes a little bit more diluted, which means we're getting close to an end of a wave, meaning pointing out to the fourth wave of the structure. So now that I have that information, I can actually go to myself and say, okay, right, if this is the case, that we're moving between these levels. Okay, so we're moving between the public losing out on the gains, the public getting liquidated, losing out on the gains, getting liquidated. You can clearly see that we are forming the beginnings of a channel. Okay, now this is not the same as drawing a channel. Sometimes they do line up. Let's be honest with each other, but it's not the same as doing this and drawing a channel. Okay, I'm not trying to do that. So now that I have this, I can start saying to myself, that is the axis at which price is moving. Okay, so let's mark that out as the axis. Maybe I need to just extend the line so you can see it going on into infinity. And then from that point onwards, it's easy to say that this area could be considered demand, because that's when we had demand zones and demand tests. Okay, and then this area over here, from maybe there to there, could be considered supply zones, because that's when the market moves into a selling frenzy. Okay, and now that I have these lines, how vague and how fine they might be on the screen, I have a good idea that I can say to myself, okay, if this is the end of the move, so the fifth wave is going to continue, we will reject around the axis line. So let's color this line now, make it thick yellow. That is where we need to reject. So I'm allowed to be bearish on a pump if we're below the yellow line, with the idea that we need to go and fall below these lines and move into these areas. So Bitcoin would potentially go and test, say 102 thereabout again, before we then start our new structure and break through and maybe go to 108 thereabout. Okay, if I'm wrong, and these do happen, guys, if price from this point on rallies gets above it, I need to forget about this, because what's going to happen is most probably is we'll be moving up, go back to maybe say 106, and then from that point on maybe do a retrace and get back to the lower end of the channel. So the waiting part is the tricky part. You're going to have to use this kind of analysis to wait for the right time for price to pick up. The beauty about this is once you have these levels, you can look at where supply and demand zones was, and you can see that there's always going to be some sort of a confluential factor around those rays. So if you're in a trade, say you're in a short and it starts falling through these levels, you celebrate. And if you're on a short and it starts bouncing above these levels, you start worrying. And you don't stay in a short if we're above the yellow line, because in the end of the day, then the move is over. And you don't stay in the long if we're below the yellow line, because then it's still probably not done retracing or still looking for a low. It's as simple as that. Okay, guys. So there I gave you a little bit of an education, a little bit of idea how you can use this 4-hour progression to look for a trade. Okay, so the target that I gave is around 102-ish, and the max target we were looking at realistically is around 108, which means from a simple support resistance area, the next area where I think Bitcoin is going to want to reject is probably going to be around 105. And then from that point onwards, we need to see what structure it created here, whether it's going to bounce and hold, go make a higher high, and then we're off to the races, or whether we're going to go and test some of these lower areas again at 99. Okay, so what in conclusion of the stream? It can go up, it can go down. I know it can be sometimes frustrating, but the trader in me now is going to do the following. It's looking for a long, and I just want to see enough retrace and pain in the market, say for the next hour or two, say roughly, say maybe around, this is probably around what, 11, 12-ish thereabout. By that time, hopefully we'll be in a buy zone, and then I can grab this. Okay. Let's quickly go to the comments, and then we're going to end off the stream. Renee, would you mind having a look at Rune in this afternoon stream? We can do that. Let's see what else we have. Minus 14K. I'm afraid of that ample fourth coin. My fault. I didn't understand how it worked. Jockey, it's a tricky thing. And that's why I have these things in the Discord, these channels, where, you know, I try and help people navigate this. So yeah, I explain everything about ample fourth. And I always say that, you know, it's extremely profitable coin to trade. If you want to trade something that's easy, trade a stable coin because it's stable. The nature of ample fourth is just by definition, the volatilities on the market cap side. And the way they do it is they take coins away from you, or they give coins to you. So in a pump, it's amazing because every morning you'll wake up, there's even more coins in your wallet, and price is probably still above where you bought. But then it's the same way when it dumps, they start taking coins. So what it does is it basically inflates the amount of pain you're experiencing. But if you go and have a look at ample fourth, there's a little trick to this that I'll briefly share with you. I'm going to go here. That's now my entry. Let's load ample, AMPL. Okay, and the place you need to trade it is on KuCoin. If you don't have a KuCoin account, you can check in the link below. It will take you to KuCoin in the video description. Let's go daily time frame real quick. So if you look at this, all that it is doing is it's balancing its market cap. So what you should not be doing is you should not be selling here because it's a stable coin. It cannot drop indefinitely, but they will remove coins out of your wallet until it comes back to that $1. Now, what most people do is they sell there. So now they're down from where they purchased probably 30, 40%, and 30% has been removed out of their wallet. So they basically get out when they're at a 60% drawdown. And then it recants. It gives you back that 30%. So normally what will happen is you'll still be down maybe 20% at that stage, but not 60% anymore. And then when it because nothing stabilizes, recompensates and overvalues on the other end, you can still walk away with this thing for free. It's the one coin where you always know what the price is going to be. So you can always buy the bargain, sit through the rebasing, and sell the markup. It's the easiest coin to trade, in my opinion. It's the easiest money I've ever made. Okay, simple as that. That was basically my breakaway. When Ample Fourth got launched in 2020, it was the easiest thing around for me. I made the most money out of that thing. Okay, let's see what else won't buy it again. And this is typically what happens. Then people say, well, I don't understand it. So maybe read up on it. Change your mind regarding this. Don't hate the coin. It's just your understanding of how it works. I promise you, this is an amazing thing to be. Okay. Don't worry, everyone. Bitcoin will always be dipping now 190, 80, or whatever. Soon I'll be dipping below 200K and then 500. Yes. Look, that's for the hodl cry, the afternoon stream. Investment wise, there's a lot. And when you look at, that's why I do a trade specific and an investment specific stream, because from a trader point of view, all of this that's happening now is, from an investment point of view, is inconsequential. Doesn't bear any relevance to the bigger picture of things. But when you're in these tiny zoomed in zones, it's easy for you to have a completely bearish view or completely over bullish view on the market. So just guard against that. Okay. Thanks so much, guys. 250 people joining in live today. Is a little less than yesterday, 50% less. That's a lot. And it's just proof. When you get it right, they don't love you. It's simple as that. You have a lovely day, guys. I'll see you in the afternoon. And yeah, links to everything's in the video description. You can go and join my Discord. I'm busy updating a lot of things there, so there's a few changes happening in there. But go and have a look. Today's charts will be dropped in the trade chat for you, so you can go and have a look at that as well. And yeah, get up to speed. Cheers, guys.
I'll keep hustling.
Subscribe now.